Hello and welcome to today's daily market recap. I'm market analyst Nick Nassad and today is Tuesday, October 27, 2009. We start today's recap with a look at some U.S. fundamental releases. The S&P Case-Shiller House Price Index showed annual prices continuing to rebound, with the annual rate improving to negative 11.3% in August from negative 13.3% in July. That marked the 7th straight month of improved readings. On a monthly basis, 17 out of the 20 metropolitan areas surveyed saw price increases, a positive sign that housing prices have bottomed out. A second report, the Conference Board Consumer Confidence Index, which was released 1 hour after the house price data, was particularly weak, falling to 47.7 in October from a revised 53.4 in September. The index had been expected to improve. The decline was led by both a drop in current conditions and future expectations, with the slumping labor market a major factor in consumers' pessimism. Taking a look at the euro-dollar pair, we see that following a test of 1.4925 in European trading, the pair slid from there until it found a low at 1.4770 in late New York trading. That broke through a level of support around 1.4850, which coincided with the release of the CB Consumer Confidence Index. Taking a look at this pair in a bit of a longer time frame, we see the support level from October 2nd, upward sloping support line that was broken yesterday, and now we've had a break of a more horizontal support at 1.4850. We're also seeing now that the retracement of this full rise has amounted to 50%, which will be an interesting level to see if we see continued greenback strength in this pair or if we have a bounce up off this level. Switching to the euro-yen pair, we see that the euro fell against the yen as well, as it slid about 150 pips in the wake of increased risk aversion. That follows a sharp slide in Monday's trading. We are now testing the area around this consolidation zone we had to end last 2 Fridays ago and to start the beginning of last week. The yen has been pretty strong. With earnings seasons in the US drawing to a close, investors are taking another look at their commitments to riskier assets, which has strengthened the yen and weakened the euro in particular to start off this week. Taking a look at the yen against the US dollar, we see that the dollar had been in about a 5-session uptrend, with the support line, if we connect the lows, that was broken in today's trading. The pair did not, however, move below yesterday's low, around 91.60 in today's trading. If we zoom this pair out, we see that since hitting a low on October 7th around the 88 level, the yen, the greenback, has gained about 425 pips before peaking in today's trading. We've seen 2 periods of consolidation along this uptrend, one resembling a flag, and the second one also resembling a flag, though it does not fit perfectly. Both have been against the dominant uptrend, and we may be due for another period of correction in this week. If risk appetite returns to the markets, however, we could see a bounce off support and then continued greenback strength. Other currency pairs that rely on risk sentiment were also weaker. Here we see the New Zealand US dollar pair, which fell for a 3rd straight session. Zooming this pair out, we have 2 support trend lines that were broken. One, a shorter term that was broken late on Friday, and then another one that goes back to a low from October 4th. That was depending on how you draw it, but here broken in yesterday's trading. Tomorrow afternoon New York time, the Reserve Bank of New Zealand will conclude its interest rate meeting. If the governor delivers a hawkish statement, it could help to support the Kiwi. In a look at the pound-dollar pair, we see that the pound held up much better than the euro against the greenback, though it did slide from its overnight high around 1.6430. The bulk of this decline happened after the U.S. consumer confidence report came in very weak. Still, the pound managed to pare some of those losses during the New York session, and since it set up several higher lows, we can draw a new upward sloping support trend line. If we zoom this pair back out a little bit, we see that yesterday we had a pretty good bounce up off support around the 1.6250 level. We'll see if the pound can continue to rally following its steep fall on Friday as a result of weak GDP data, or if the short-term support line will be broken soon and we will have a retest of this horizontal support. Taking a look at some of our upcoming releases, we see that Japan posts its retail sales, Australia releases data on consumer prices for the third quarter, and New Zealand will reveal an index on business confidence. Overnight, there's only one major release, and that's the German import prices. Tomorrow, the US posts two important releases, durable goods orders and new home sales. And that'll do it for today's recap. Thank you for watching here at cmsfx.com, and happy trading.